ServiceNow stock has done incredible over the last 5 years. We can see it's up 300%. Over that same time frame, the S&P 500 is only up about 90%. If we go to the all-time chart, it even looks better. It IPO'd in the middle of 2012 at 30. It has done incredible. I mean, we can see it's up over 4,000%. In the 10-year chart, since 2014, late 2014, it was at 72-ish. So it has clearly done very, very, very well in the 10-year chart as well. I don't think that's too surprising to most of you. I think most of you have heard about the stock, know about it, are considering buying it, whatnot. We're going to be looking at the financial side of things. We're going to be talking about the stock and where it might go in the future, right? Because that's all that really matters. So we can see the PE is 157, the forward PE is 72. So I assume most of you know this, but in case you do not, that is a very high PE. This is a stock that you are paying for. You're paying for what it has already brought, right? Which is insane earning growth, right? The reason this stock is valued so high is, well, one, because of what it has already done. We can see if we go to earnings, since 2021, it has grown revenue, and it's expected to. I'm expecting it to hit this mark. It's going to grow revenue at a 23% mark. That is almost doubling the S&P 500. It's been even better on the earnings side of it, meaning they're increasing margins, becoming more profitable. That is amazing to see. But yeah, if you can maintain 22.9 in the 23 range of revenue growth while maintaining the earnings growth every year consistently, this PE valuation is going to fly by really quickly. Actually, it won't. It'll probably stay that high, and you'll see insane growth on the stock itself, right? So this isn't a cheap stock. However, the earnings it has gotten and the earnings that we're looking forward to, it is understandable why it's here, right? This is understandable. Now, there is risks associated with that, right? So actually, let's quickly first dive into what they do. I'm assuming also not even just the earnings, but a lot of the value put on the stock is the fact that it does AI solutions for making business more efficient, right? Which, believe it or not, is what AI is known for. I mean, I know they did a lot of automation outside of AI, but now AI is really taking off. This is a company that's key and primed to take advantage of that, because that's what AI is. We're looking forward to doing, right? It's really cool when it writes poems and stuff like that, but making the workplace more efficient, right? Because if you can make every business more efficient, that's just going to be so much money for everyone, right? Now, the two risks with it, the two big ones I see. The first one is that there's a lot of players in AI, and if someone like really hits it out of the park, really blows it out of the water, I combine those two sayings, you may struggle here. I don't think that's the case. Very, very small chance of that happening, but it is a chance. Also, if you did start to slow down earnings significantly, you had a bad year or something like that, just because of how high this PE is, you would probably see the stock fall a lot, right? If they're just like, crap, we're really just doing bad and we're going to have a really poor year, we're not going to really grow. I don't see that happening, right? I think it's very unlikely. However, if that were to happen for whatever reason, this would fall rather dramatically. However, I believe this stock is primed in the long term, right? If you're buying at these levels, you may run sideways for a while. It may just keep running up, right? There's a very decent chance. However, as a long-term hold, I'm not super worried about this stock. I just wouldn't have my entire portfolio full of stocks with PE levels this high. Personally, that's my risk tolerance. You have your own risk tolerance, but that is a risk, right? But outside of that, as a long-term hold, ServiceNow seems primed to do great in the AI race. And yeah, $210 billion market cap is high, right? However, if they really hit it out of the park, this will be much, much, much higher, right? They keep deriving earnings that they have. It'll be much, much, much higher. There's a reason this stock is valued at such a high PE, and it's up to you to decide to whether you want to own it or not, right? So let's take a quick look at a few different things. Let's take a look at PE, forward PE. So yeah, we can see PE has run up over the last year. Not surprising, the stock itself is up a lot, and there's really belief that they can do really well with the AI stuff and that sort of thing, right? Let's take a look at what some analysts have to say. Almost all of them love it. What is that? 34 of the 40 analysts say buy or strong buy. There's one random dude saying underperform, and there's a couple people saying hold. I personally don't look too much into what analysts have to say. You can see the price targets are mimicking that. That's probably because people aren't picking up. So because, you know, if they go up super fast, I mean, we can see, yeah, it's up another 7% over the month if the chart ever loads correctly, 40% over the last 6 months. Analysts are usually slow with price targets. And also, I personally factor in what analysts have to say. They aren't huge for me determining what, you know, I want to do with it. Let's take a quick look at some of these on Schwab. Schwab gives it a C of 62. So they think over the next year it'll be meh, which I understand because it's run up so much. I don't necessarily think that's going to happen, but that's probably why you get the rating here. They updated that just 2 days ago, right? So probably quicker than a lot of the other analysts. Buy, long, buy. 10 out of 10 weighted average key issue score. Whatever you think of that. Some other ESG stuff. Now, just to wrap up, I mean, long term is how I like this stock. It may run sideways for a little bit, but honestly, it probably will keep going up if they keep deriving good earnings because that's just how it is. If you enjoyed this video, I'd appreciate if you left a like or subscribed. Whenever someone subscribes, I really notice YouTube pushes the video out a lot. YouTube really is like, oh, people like this, I'm going to show it more. So I'd appreciate when all you guys do that, and I appreciate all the love you've been showing on this channel recently. So, but anyways, that's all I got for this video today, guys. I'll see you next time. Thanks for watching.